Hey, DC Wright-Hammer here. These are 5 things that I've come up with that I think indie authors, self-published authors should really consider doing to keep themselves out of potential pitfalls that can happen financially, that can really hold you back from the writing side of things, from the marketing and pushing your books, and all of the things that go along with basically being a small business owner. Check it out. Now, a couple of things to cover before we get into all the details. Number one, I am not a financial advisor or a tax professional. You're going to want to consult those types of folks before you take any kind of advice and make any decisions that have a real impact on your small business. And also, if you like this kind of content and other content that I put out, make sure to subscribe down below and give this video a thumbs up. So the number one thing that I tell indie authors or self-published authors to avoid financially is going into debt to publish or market or format or anything involving your book. Going into debt really does change the dynamic that you have with your business, because you are a small business owner, as well as your writing. You start in the red, meaning you've got ground to make up from the beginning. And so every time you have an opportunity to sell a book and you don't, you start to think about interest payments instead of moving that next book. And it just really kind of ruins the fun that you can have being an indie author, self-published author, by going into debt. When you're in the red, you're automatically thinking it's going to take X amount of dollars to ROI. Now, you always want to ROI, which is return on investment. So if you spend $1,000 publishing a book, you're going to want to make $1,000 back. But if you do that with cash, there's not this interest sort of hanging over your head the whole time that you're going to have to pay back plus that $1,000. And it just allows you to focus more so on the books. It allows you to focus on the present and the future rather than worrying about that past, swiping of a credit card or taking out a personal loan or whatever it might be. So don't go into debt to do anything regarding your books. So the second thing I think self-published or indie authors should do financially is be a sole proprietor. This is instead of being an LLC or incorporating. Both of those statuses as businesses come with fees that you need to pay up front and some paperwork that you have to file. And until you have a big enough footprint as a business and you start to make a living, a significant living, selling books or writer services, let's say you're doing editing services or whatever you might be doing, until you start making a significant amount of profit doing those things, the benefits of an LLC, which is limited liability company, or a corporation incorporating, they don't really make sense for the small business owner. So you could be a sole proprietor and you can run your business as a DBA, so doing business as. If you have a pen name, it makes it really easy. Doing business, your actual name, doing business as. In my case, I do doing business as DC Wright-Hammer, which super easy. And so consider doing just the sole proprietor, not spending the money, paying the fees, all that for being an LLC or incorporating until you really start to establish yourself as a significant business. The third thing that I suggest indie authors or self-published authors do is open a business checking account separate from your personal checking or personal savings accounts. And the reason why I think you should do that is because it allows you to work completely out of that business checking account for any expenses or any income from your business. And it just keeps that divide between what you're doing personally and what you're doing from a business perspective. This is especially important if you plan on keeping money in your business, retained earnings as it's called. If you keep any profits that you want to reinvest in the business, which we'll talk about later, in there, it makes it really easy to keep them in that business account. If you keep them in a personal account, it starts to get confusing when you go to file your taxes, something else we'll talk about in just a little bit. It just gets really confusing on what money came from where, and you might end up eating into the business fund if it's going into your personal account. So pick a business account that works for you. Now, you do want to be careful, because certain banks will charge you fees on these business accounts. So do your research. In fact, what I'll do is I'll just do a quick search for business checking accounts. I'll put a link in the description, not sponsored, but at least that gives you a starting point where you can look for no fee business checking accounts. Sometimes it's just an online bank. It's not some of the major banks. I know I was talking to Chase Bank about opening a business checking account. And they're like, there's no fees as long as you keep $2,000 in the account and don't move it. Which, you know, for most of us, that's a lot of money to just be sitting in a business account to maintain, so we don't get a $15 fee every month. And that can really eat into things you want to do with that $2,000. If you get those $15 fees, that's huge. That's a number of books you might have sold. And so really do your homework when you're opening a business checking account. Find one with 0 fees, maybe some, you know, bells and whistles or something like that, that maybe you can gain. If you do keep money in there, you actually make money rather than just avoiding fees or something like that. But do your homework. I'll put some kind of link in the description to get you started, but make sure you choose a bank account, business bank account that works for you. The fourth thing that I tell indie authors or self-published authors who are actually doing really well, moving books, maybe they're providing services, if you're turning a profit of any kind, you're going to want to file what's called quarterly tax estimates. And so you're going to want to check with, and this is United States specific, obviously I'm from the United States, but if you are making profits quarterly, you need to pay into the IRS. You need to go to the IRS website. There's like a 1-page form basically where you estimate how much you think you're going to have to pay in taxes, and you send them an estimated payment once a quarter. The sort of rule of thumb that I've used in the past with this is 25% of what you make, 25% of the profits that you make for that quarter. Fill out that one form, tell them how much you're going to submit that amount. You can do it all online, and it's really easy. The problem if you don't do some of these things and you are making significant money and then you go to report it on, say, like your annual tax refund or your annual tax filing, you can get audited, and it can really it can be stressful. So taking your mind off of writing books and marketing and advertising, and there could be significant fees that you have to pay as a result. That's going to eat into those profits that you have anyway. So it's best to just pay those quarterly profit taxes, so just 25%. So if you made $100 in profit, so you know, not some, you know, above and beyond all your expenses, you have $100 left over, save $25, keep that aside at least in your mind, and make sure to pay that as a quarterly tax estimate to the IRS. Now, on a state level, you're going to just want to do your research on that. I am not familiar with all of the states by any means. But just, you know, double check with your state IRS websites to see if they have anything that you need to pay quarterly, just to stay on top of it. But federally, just 25% is usually a good rule of thumb. And the number 5 thing that I tell indie authors or self-published authors that they should do financially is reinvest into the business. One of the things that you'll find as a small business owner is you get double taxed, is what they call it. So if you make a profit as a business, you get taxed on that profit. If you take a salary out of your business, you get income tax on that salary. So let's just use some round numbers here. Let's say you made $10,000 in profit and you wanted to take $5,000 home. First, you'd get taxed on that first $10,000 as profit for your business at 25% or more, whatever it might be for your, you know, federal and state taxes that you might have to pay. Then that $5,000 that you take of what's left over of that $10,000 gets taxed at, you know, ordinary income. Now, $5,000, that's a low amount, but if that's $5,000 on top of other income you might have, it could put you into another tax bracket, and you might end up paying some taxes on that. So just, you know, be careful with that. If you can reinvest in your business, so reinvest truly, buying, you know, if you got to buy books for your inventory because you're going to do book sales, you know, that's a cost, and you can, you know, write off some of that against your profits. If you're buying marketing or ads, maybe your website, maybe you have social media ads that you're running. If you want to buy swag, bookmarks, any kind of physical media for those book sales, reinvesting in that. If you need to buy a new laptop that's going to be used primarily for your business, writing books, being an author, running your business, some of those expenses you can justify, and that can bring down the total amount of profit you were going to take out of the business anyway. And then you don't have to pay taxes on that, and your business starts to grow. You can do more. You can have more exposure, different things like that. So consider reinvesting in your business. So there you go. Those are the 5 things that I think indie authors or self-published authors should consider financially. And it's going to keep you focused as a business owner, which is going to allow you to then focus as a writer and do more writing, publish more books, and not have to worry about some of those financial headaches that come up. If you like this kind of content, other content that I put up, please, again, subscribe down below, give this video a thumbs up, and I will catch you all next time.